Welcome to Pressure Points. Our topic is Meta earnings. And as of this recording, which is about an hour and a half after their earnings call, shares are down just over 7%. At one point during the call, they were down just over 9%. And when the numbers initially came out, they were down like 7, 8%. And so it gapped down on the earnings. As soon as the numbers came out, gapped down a little bit more and then has recovered. And so we're going to start with the pressure point. Why is the stock down? And the answer is, I believe that expenses are growing faster than revenue. And that is a flip of a script that Meta investors have been reading from for the past couple of years, where revenue growth has been nicely outpacing expense growth. For example, in calendar 24, revenues were up about 22-ish% and expenses were up about 9%. If the first couple quarters of this year, we had also 20-ish% revenue growth and 10, 12% expense growth. And then in the just reported September quarter, we had 23% revenue growth and just over 30% expense growth. And the commentary on the call, and this sent the stock down a couple more percent, was that they're going to be aggressively investing next year, not only just in CapEx, but part of that investing in AI and the CapEx is going to go through third parties. So they're going to be buying cloud from who? I still don't know who that's going to be. I think I'd be surprised if it was from Microsoft or Google, but they're going to be buying some CapEx capacity, perhaps Oracle, but they'll be buying some capacity and that's going to fall into some of the expense lines. So we could see a scenario where next year revenue grows at 18 to 20%. The street's at 16% now, but grows at that level. And you have expenses potentially growing at like 40% with the incremental third-party cloud expenses getting layered in there. And so that's just a flip of the script. And that kind of jives with the stock just gapping down because it's just happened almost immediately, despite what was a really good quarter besides that and a great outlook in terms of AI. So that's the pressure point in terms of why is the stock down. Now we're going to take a step back and kind of digest some of the bigger points. And the first one to me was around the daily users, which were up 7.5% year over year. That's 3.54 billion people. There's 8.2 billion people in the world. That means 43% of the world uses a Meta product on a daily basis. I can't even spit it out. It's such a big number. But that has been growing. That number, the growth rate has been accelerating. If you look back in each of the past 4 quarters, we've had accelerating growth. If we rewind back a year ago, it grew at 4.5%. And so we've seen this continued acceleration off of big numbers. And what's the takeaway there is the kind of the magic, the addiction, if you will, of Meta's products is intact. And I think that that is just a huge asset that is sometimes underappreciated by investors because that's what they build off of. They build on that retention for future products and future ad engagement. So that was an important takeaway. The third piece I want to talk about is just a little bit more on CapEx. And Zuckerberg kicked off the call and said that they are going to be aggressive and it will increase substantially next year. Now, they did give some guidance for this year, but the high end of that guidance was the same as the high end of the guidance that they gave 3 months ago. And in general, CapEx is a good thing when it comes to AI. You want these companies to be increasingly more because it's a sign of their increasing optimism. And Zuckerberg undoubtedly is optimistic, and I would describe him as the most optimistic. He's on this super intelligence framework. How much they're spending is greater than what the other companies are. So they did not give detailed guidance about calendar 26 CapEx increase, but they again mentioned it was going to be up substantially. And the street was looking for 40% growth. He also said that he wants to build this for the most optimistic, those are his words, the most optimistic outcome for AI. And that could be viewed as somewhat concerning for people that they're overbuilding. He added that if that doesn't reach its full capacity or what he believes it will, they have plenty of use for that capacity. But when you put that together, My sense is that the CapEx is going to grow 60% plus for next year, and Meta will continue to be the most aggressive investor in this. And there is a piece around the amount that they're investing into AI and the infrastructure of a self-fulfilling prophecy. These companies across the board are, after these earnings, the earnings tonight too, they're all saying they're going to continue to spend more than what investors had thought 2 weeks ago for calendar 26, or implied that. So the bigger the AI brain, the more smarter that the products get, the more people use it, the bigger the brain gets. All that, I think that virtuous cycle is intact. One last piece about revenue growth for the December quarter. They guided up. You have to assume they hit the high end of the range. The high end of the range that they gave was 3% higher than where the street was. So it wasn't as potent as kind of a guide up that they've had over the past few quarters. They also talked about some Reality Labs change in how they recognize revenue for some of the glasses and Quest going into the holiday quarter. They didn't give this specific number, but you can probably figure that probably had about a % impact on growth. I'm splitting hairs here, but they effectively guided apples to apples revenue probably 4% higher than where the street was at. That's going to come out to a revenue growth of 22%, below what they just reported, but a similar growth rate that they had in the March quarter, a couple quarters ago. So the big picture here is there's a change script in terms of understanding the dynamic between expenses and revenue growth. But I believe eventually, this is my takeaway, eventually that these investments will yield higher revenue growth, and eventually revenue growth that will exceed expense growth. And the script will flip back to its proper place. And I think shares of Meta will be rewarded as they progress down that road. On behalf of Pressure Points, I'm Gene. Bye for now.